Well, hello. My name is Matt Johnson. I'm from marketing, and we're here for another episode of CapEd Makes a Podcast. And I'm joined today by Andrea Kinslow from training. How are you, Andrea?
Good. How are you?
I'm doing well. So, a couple months ago, we added a feature to our eBanking app called SavvyMoney. Have you checked that out?
I have it. It's awesome.
Yeah. What do you like about it?
I like that the score analysis gives us all these kinds of ratings, like my credit score, where it stands. I get a good grade.
Right. Yeah.
Pretty cool. I really love the usage. So it tells me what percentage I'm at and what I need to be under for credit card usage, which I love.
Yeah. I looked at mine. I learned some things. I learned I should probably refinance the current auto loan I have. So that's probably in my future. I didn't realize how much I would save, and I wouldn't have known that if I hadn't checked it out. So yeah, if you're a CapEd member, you use our e-banking. It's free credit score check, and lots of useful tools to help you keep on track. And that's what this month's episode is all about. So we have Todd Christensen and Jeremy Sankwich, who is our new Chief Lending Officer, and they are going to be talking all about the details of SavvyMoney and ways it can help you. So that should be a good episode.
Yeah.
So before we jump into that, we want to stop and talk a little bit about one of our ongoing programs that doesn't always get as much attention as we'd like, and that is We Love Teachers, weloveteachers.org. And that is a really cool program that we have because it's an official sponsorship or partnership rather with a national organization. They help teachers all over the country. And with We Love Teachers, we simply filter the Idaho-based projects. And the cool thing, having that partnership at the national level attracts a lot of attention from really big foundations and donors who do match funding.
Very cool.
Yeah, it's really exciting. And so if you're thinking of helping a teacher out, giving money to a teacher to help with pay for a project that there isn't funding for, one of the cool tools that we have at weloveteachers.org is you can look up projects based on the ones that have match funding.
Very cool.
Yeah. And it really varies on, what the particular foundation is about. A lot of them have a technology emphasis, for example. There's one listed right now, and as of the day we're recording, which is in the end of April, actually, there's actually one in Jerome, Idaho. So a rural community, fairly remote, not a lot of resources, probably a limited school budget. And there's a robotics program, apparently.
That's awesome.
Yeah, which is like, okay, that's,
big thing.
that's the kind of thing, where the next big innovation in robotics could easily come from a community like Jerome. And so you want to foster that. And as of right now, when we recorded, there's a Infosys Foundation USA, and apparently they will match up to 3 times what you give.
That's impressive.
That's really impressive. So, if you can spare $25 to help this teacher out, if you're really into robotics, that's something you believe in, that's instantly $75 towards that project. So
that's great.
It's really cool. A couple of others that we want to mention today. There is a mathematicians need manipulatives. The teacher likes alliteration, I guess. Horizon Elementary in Boise. So a math teacher that needs some resources that they just don't have the budget for. That's the thing about a lot of these projects is, every teacher has a different teaching style. You never know what challenges you're going to face with a particular class or in a particular school year. Last school year being a really good example of that. And so, there isn't always a budget for the things that the teachers really want or need to help the students that they have currently in their classrooms based on their particular individual learning styles. So in this case, there's a match funding double, 2 times what you give from Oak Foundation. Apparently they have an interest in mathematics. So
it's a good thing to know about.
Yeah.
Hands-on stuff.
hands-on stuff. And I think that's what that is. Yeah, just to help. It's a kind of a tactile approach to mathematics, which is really cool. But of course, it's a resource, it's a material. So, that's in short supply sometimes. And then the last one we want to mention, Endeavor Elementary School in Nampa. The school year is actually, believe it or not, beginning to wrap up. It's just amazing. And this teacher's thinking ahead. She teaches pre-K through second. And she wants to, because after this last really rough school year, year and a half really, she's trying to help prevent summer slide. That's a term that teachers use about things that students forget during the summer months when they're not in school. And so she's putting together these learning kits.
That is amazing.
Yeah, really thoughtful, really cool. No cost to the student, of course, but she still needs the funding to buy these for her students. Again, there's an anonymous funder.
I love it.
Somebody who is, very generous. They're willing to do 2-time matching on that one as well. So that's Nampa community, school in a community where it sounds like the students could really benefit from that. And again, if you're listening to this, you want to help local teachers, please go to weloveteachers.org, and we appreciate anything you can do to help them. So
yes, please donate.
Yes. So just a friendly reminder that We Love Teachers is a cool program, and we really are proud of what we've been able to do and help the way we help teachers with it. And so I guess now that we've mentioned that, we'll jump over to the interview and talk all about SavvyMoney.
Awesome.
Well, thank you. It's great to be here today and a great opportunity to be able to continue to drive towards our mission and vision, especially around financial well-being. And today I'd like to welcome a special guest, Jeremy Sankwich. He is our VP of Consumer Lending. So welcome, Jeremy.
Thanks for having me.
So VP of Consumer Lending, what does that mean and what do you do here with CapEd?
Well, the title doesn't mean a whole lot, but what I do is I look at the consumer lending department, and we have 4 different functions. We have the processors, we have the underwriters, we have the servicers, and then we have a sales team. And within consumer lending, that's what I oversee.
Okay.
This includes auto loans and RVs, personal unsecured loans, and credit cards.
So it's your group that determines whether a member gets a loan or a credit card and at what rates or what terms.
That's correct, yeah.
That would be a good summary. So a key element around that, we often hear credit score, credit report. Sometimes those are used synonymously or intertwined. Let's talk a little bit today about credit reports, credit scores. What are they? What is the difference? How do they relate to each other?
Yeah, that's actually a good question, because this is a really common myth when it comes to credit reports and credit scores. The 3 credit bureaus, Equifax, Experian, and TransUnion, they do not score your credit history. They simply store your credit history. And the key here is that a lot of people, and I've heard this many times, whether it's in mortgage or consumer lending, is they'll say, man, Experian always scores my credit history lower than TransUnion, for example. And the score itself comes from a different company. It's not the 3 credit bureaus.
Okay.
It's one of 2. It's either FICO or Vantage Score. So when a lender like CapEd pulls your credit, we pay one, sometimes all 3 credit bureaus, depending on the loan type, to access your credit history. Then we also pay FICO to apply their scoring model to the credit bureau data. And this is how a lender pulls your credit.
So we have 3 bureaus. They store the history, and then you have the companies like FICO. That's why we hear FICO credit score.
Mm-hmm.
Okay. So what's the difference between a credit score and a credit report?
Yeah, that's pretty much the primary difference, is that the credit bureaus provide your report.
Okay.
But then FICO or Vantage Score, it depends on what scoring model's used. They're the ones providing the actual credit score.
Okay. And that credit score is a 3-digit number?
Correct. And another question that I really receive a lot of times is, well, if the credit bureaus are not scoring my data, how come I have 3 different credit scores?
Good question.
Yeah.
I get that question on occasion of, I've looked at my score, I've gone to this lender, this lender, this lender, and they've given me a different number.
Mhm.
Why is that?
Well, the reason why you may have 3 different scores, even if the same scoring model is applied to all 3 credit bureaus, is something that consumers need to know, is that credit reporting is voluntary. As a lender, we are not required to report the credit history to the credit bureaus.
Okay.
One caveat there is if a lender selects to or decides to report the credit history of a consumer to the credit bureaus, they are required to report all the credit history.
Okay.
You cannot pick and choose what to report. It has to be everything.
That carte blanche or transparent, if we're going to do any, we're going to do it all,
Exactly.
regardless whether it's good or bad.
Exactly. Now, the key issue here is that because it's voluntary and because a lender may select to report the credit history to one bureau, 2, or all 3, this may result in the credit bureaus having less or more information about you than the others.
Okay.
And so because the credit bureaus may have different, whether it's less credit history on you or more credit history on you because of the different lenders that you borrow from, then
Okay.
the same scoring model applied to the credit bureaus will result in 3 different scores.
So the credit bureaus have the report. Then there's entities, FICO in this case, that provide the credit score.
Mhm.
So how regularly should an individual review their credit report?
The reason why, well, they should review it regularly. Monthly is best,
Okay.
perhaps more. It just depends. But the reason why it's important for consumers to check their credit history, check their credit report regularly is predominantly 2 reasons. The first one is because of fraud. You want to make sure that what's reported on your credit bureau or credit report is in fact your own. Somebody hasn't accessed your identity or accessed your credit to borrow money in your name. You want to make sure that it's accurate. The second is to ensure that everything that belongs to you is in fact reporting and up to date. I'll give you an example is if you were to pay off a loan like a car loan or you were to sell your home, you should probably check in with your credit report within 30 days and make sure that trade was in fact removed.
Okay.
Oftentimes when I was in mortgage, we would have borrowers applying for a pre-qualification or a pre-approval to buy a home. And when I would review, this was my personal practice, when I would review their credit report with them, not just tell them their score, I would actually go through it line by line with them, partly to educate them, but also to make sure everything was accurate. And there were many times where the borrower would say, that auto loan we paid off 6 months ago. And so that $350, $400 payment that's reporting on their credit report, we're using that in underwriting their loan. And if they paid that loan off 6 months ago and it's no longer an active trade, even though it's on their credit report, they have an opportunity to remove that from the
Some of the elements that we had talked about of debt to income ratio,
yes.
and those are elements that underwriters or your group will look at
Yeah.
as a way of evaluating that person, or in this case, our members' credit.
Exactly right. And that's really important because if you have a trade that's on your credit report that maybe you've already paid off, that could mean the difference between how much you qualify for in buying a car or buying a home, or even if you qualify at all. And so making sure that it's accurate and that there's nothing being reported on your credit bureau that is either been paid off in the past or even worse, not even yours, and it's because of fraud.
Okay, so there's those 2 elements. One that is yours,
Yep.
may have already been taken care of. I know my wife and I have had the experience where we had an account open when we lived in a different state. We've looked at our credit report and go, why is that still there?
Yeah.
Oh yeah, we did open that credit card at that merchant, and then we've taken steps to close it down. But I've heard that sometimes that's not the best practice. What are the elements that go into evaluating the credit score? What does FICO use to evaluate the credit history to provide the credit score?
Provide the score, yeah. So there's 5 factors that determine a credit score. And I can go through each one briefly and maybe even share a tip or a trick within each one and how to either build your credit or recover your score and make your score go up.
Okay.
So the first is your payment history. And as a educator or a coach with credit reports, there's not a whole lot I could do here to help you because we can't go back in time and make your payments current. But the payment history is the most important. Making your payments on time for your cards, for your auto loan, for your mortgage is the most important.
And if you're not doing it today and you're
Yep.
wanting to improve your credit score, start doing that.
Yeah, get current and
Get
then
current.
keep it current.
Okay.
And the longer you have between the last time you may have missed a payment, if that's the case, the better your score will be over time.
Okay. So that's number one is
That's
payment
number one.
history.
Yep, and that's the most impactful. The second one is what we call credit usage. This means, or we're implying the account balances compared to your limits. Specifically credit cards here. This is one of the fastest way that I like to say hack your credit score is because a significant portion of your score is determined by this ratio of your credit card balances to the limits. Now, the industry jargon here is called the utilization ratio.
Okay.
The lower this ratio, the higher your score will be. And so we can take a look at somebody's credit report and look at their credit cards. And sometimes we have borrowers who apply for loans with us who may have 3, 4. I've had as many as 19 credit cards
Whoa. Okay.
with balances. And the remarkable thing about this individual who had the 19 cards is all of his payments were current. He had never missed a payment.
So that's where they go together. It's not just one data point, but it's how all 5 data points come together.
Correct. Yeah. And with his 19 cards, it was the reason why it was remarkable is that takes a lot of organization and time to keep 19 minimum payments coming in every month on time, every single time. So there's a lot of work that we can do to help this individual out. But when it relates to the credit usage, that utilization ratio is really important. If we can pay down our balances as it relates to the limits of the cards, we can see our scores go up pretty quickly, much quicker than looking at payment history, which takes a lot more time to build your credit.
To be able to move that needle, so to speak.
Exactly.
A question in that regard. So is it better to have a high credit limit and then low utilization? Or if I'm using my credit card and paying it off every month, and I say I put $2,000 on the credit card per month and then I pay it off, is that okay? Or should I have like a $6,000 or $7,000 credit limit? Or if the financial institution where I have my credit card offers me a $35,000 credit limit, what's best in that scenario?
Yeah, it's going to be individual to the borrower.
Okay.
As you know, that utilization ratio that we talk about, that credit usage ratio, there's 2 ways to move that. You can pay down the balances,
Okay.
or you can increase your limits, which will have the same effect. One of my perspectives that I take when we educate borrowers is to always include personal finance with how we coach credit reports and credit scores.
Right.
I think those two need to be taught together, and we need to help our borrowers making good financial decisions as well as increasing their score. So sometimes it doesn't make sense to say, why don't you apply for 2 more credit cards so you can build your number of your total limits in order to keep that score down, or excuse me, that balance down, the ratio down. We want to help borrowers get out of debt. We want to help them get out of high interest rate debt so that we can coach them how to pay other people less money.
Right.
And so that's one of the principles we take.
Yeah, that's one of the things that I share when I engage in a conversation around that utilization and the limits is it's okay to have a large limit, low use, but often individuals will find themselves in the trap that they have a large credit limit. And so they draw upon that credit limit, and that doesn't help the scenario.
Exactly right.
So we've talked about payment history, credit usage. You said there's 5. So what are the other 3?
The other 3, the third one is length of credit history. And these are in order of how they impact your score in terms of their weight.
Okay.
So the third is the credit history, length of your credit history. The length of this history is not based on just your oldest active trade. It's based on the average age of all of your current trades that you have.
Okay.
So for example, if you have 5 trades, 1 mortgage, 1 auto loan, and 3 credit cards, the age of each one of those 5 accounts added together, divided by 5, gives you your average age of credit history.
So is that, I was looking at closing down this, I referenced this earlier, an account that we opened up, my wife and I, 10 years ago. We've never drawn upon that credit that's made available to us. but I've chosen not to close it down. Is that something that's helping in that
Yes,
history?
It is. It is. And in this example, this fictitious example with those 5 trades that a person may have, of those 3 credit cards, let's just say that one of them was opened recently, say a month ago, and the other 2, like you say, are 10 years old each. And if they decided they wanted to close one of their credit cards, the decision on which one they close can really have a big impact to their score, up or down.
Okay.
If they closed one of those older trade lines, they can actually see their score going down because they've just made the average age of their credit history move down because they just closed one of their oldest trades.
Okay.
However, if they chose to close that trade that was only open for 1 month, when they close that, their average age will go up. Therefore, their credit score will go up, all things remaining equal.
Okay. So what are the last 2 items? And I know that we wanted to get into a conversation around resources that CapEd provides to our membership to help them monitor not only their credit report, but also their credit score. And an item that we'll talk about, the simulator, of how you can, as you say, hack your credit score.
Yeah. And that model shows all 5 of these. The 4th one is the mix of credit.
Okay.
The different types of credit you have will also affect your score. Installment debt, like auto loans and personal loans, are scored higher than revolving debt, like credit cards.
Okay.
So having a good mix of credit will be a good way to help keep and maintain a good credit score.
Having that car loan, a credit card, a mortgage,
Yeah.
having that as a balance.
As a balance, yeah.
Okay.
And the 5th factor is the new credit. This is another way of saying credit inquiries. Applying for credit will affect your credit score. Multiple inquiries, however, for the same product, such as a mortgage, that occur in a 15-day window will be treated as one inquiry
Oh, okay.
for context of scoring. And this is because the scoring companies like FICO and VantageScore, they know that consumers will rate shop and that they'll apply for a mortgage maybe in a couple different companies.
Okay.
So that's that, and they knowing that they know this, they don't punish the consumer for rate shopping, but it's within a specific window. And this is only applied to some loans, some types of loans than others. This does not apply to credit cards.
Okay.
So if you apply for 3 credit cards at 3 different companies, and even in a 15-day window, you will be hit with a
That'll
inquiry.
negatively impact your
So,
history, which then impacts the score.
yeah,
Okay.
it'll impact your inquiries, which will impact your score.
So you mentioned certain loans, FICO takes that in consideration. You mentioned mortgage, but what would be the other loan types?
Auto loans is another example.
Auto loan, okay.
Because consumers will rate shop for an auto
Right.
loan as well. And so it's important to know that when you apply for credit, it does have an impact to your credit score in multiple ways. One is you have the inquiry, but 2 is when you open that new trade, it's going to decrease the average age of your credit history.
Okay.
And monitoring how much credit somebody accesses, how much they're applying for credit is an important factor, not just for underwriters in reviewing a credit report, but also for the score itself.
Okay. So there's a lot packed into that credit report
There's a lot there.
that then equates out into this 3-digit number.
Uh-huh.
What are some of the resources that CapEd provides to our membership to help them monitor their credit report and their credit score?
Yeah, there's a lot of information here, and it can get complicated. It can be very simple.
Mhm.
It's very dependent. There's 2 resources that we provide that I recommend to our consumers, our members, that can help them understand their score a little bit better, but also to be put more in control of their credit report.
Okay.
The first one is annualcreditreport.com. And this is an important tool because we want to make sure that again, you're reviewing your credit regularly, you're looking at your credit report regularly. And annualcreditreport.com allows you to access all 3 credit bureaus. And you have to pay to see your credit score, again, because that's being provided by a different company, not the bureaus.
Okay.
But you can see your credit report for free with all 3 bureaus. And for an undetermined amount of time, I don't know when this will stop, but because of COVID, annualcreditreport.com is allowing you to access your credit reports for free weekly. At this
Really?
point.
Okay. I did not know that.
Yeah.
Okay. And then what's an internal resource? I know that we want to talk a little bit about the banking app that we have. We refer to it as eBanking or mobile banking.
Yeah.
And inside that, we have a tool that's called SavvyMoney.
Yep. And that's the second. That's the
Okay.
second tool that
You
we
want
like
to talk
to
a little bit
recommend.
about that then?
Yeah, this is a new tool for us. It's very powerful. And with SavvyMoney, it's behind CapEd's online banking, available to our members. And this is a way for you to review your score as well daily, because the score is updated daily.
Okay.
And you can also review your credit report, all of the information on it. And it breaks it down into these 5 credit scoring factors that I just described. So the consumer can review how they do within each one of these factors, click on that factor and see some tips that are specific to their credit bureau, their credit history, and how they can help build or recover their score, how to establish credit, etc. And again, this is available for CapEd members behind our online banking.
That
It's a
means that
certain-
individuals can log into eBanking.
Yep.
Once they're inside the app, you can look for the widget that says credit score. If you've already accepted the terms and conditions, that's when you see your report as
Yep.
well as your score. If you click on that and you haven't yet accepted the terms and conditions, you'll go through a process
Yeah.
so that you accept our terms and condition. That's sharing a lot of the information and then recognizing that you can receive the credit report and credit score.
Yeah, it's giving our partner, SavvyMoney, permission to pull your credit. And
Okay.
then once you do, you don't have to do that again. Every time you log in, you can see what your credit score is that day, the following week, the following month. But the powerful side of this, again, is you're able to see all of your credit history and account information, regardless of what lender or creditor it's with, so that you can make sure it's accurate. You can make sure it's yours. And you can monitor that on, again, a daily or a weekly basis. And this is a tool that we do not charge our members for.
Right.
It's free to them.
It's an awesome opportunity for us as CapEd Credit Union to provide to you, our members, a financial well-being tool
Yeah.
that's part of your membership, part of being a part of us. But it not only shows the information that is on file with CapEd, but it also gives you that full view.
The full view, your entire credit history,
The entire
regardless
credit
of where
history.
it is.
Okay.
Yeah.
Okay.
And the second powerful feature of this, which I honestly think is actually the most powerful feature of this tool, is how we give that information to and put the power of education in the hands of the borrower.
Okay.
And the consumer. They have what's called a score simulator. And what the borrower can do, or what the consumer can do, is test out potential choices they make with their credit before making them and see how that'll actually impact their score. So this could be if I were to open a new credit card, or if I were to move balances from one credit card to another, if I were to close one of my credit cards, if I were to increase the limits of a credit card, how does that impact my score? So they can toggle through these different features and see how can they maximize their score, and or if I wanted to make a change to my credit, closing a card, opening a new card, see what that's going to do to my credit score prior to actually making the decision.
In truly a simulator fashion that,
Yes.
hey, let me play around with these levers here. What if I do this? What
Yeah.
would its impact be before doing it
Before doing
in
it.
reality? Okay.
Exactly. And what's funny about the simulator is my wife and I actually used this the other day because we both logged in and we were kind of seeing how the same option there is close my oldest credit card.
Mhm.
That's an option where you just click the button and it'll show you exactly what it'll do to your score. And so when I do it, it only decreases my score by 7 points, which wasn't very substantial. But on hers, within her login with her credit history, if she closed her oldest credit card, which happens to be her only card, if she closed that, her score went down 87 FICO points.
Which then has
Or
an
points,
impact.
excuse me, not FICO, but 87 points.
Which then has an impact on the underwriting from lending
Correct.
institutions and what the rate would be and what the term could potentially be.
Yeah.
Okay.
And what this illustrates for me, and what I try to coach our borrowers with, is that these are principles that the scoring model, the factors that affect somebody's score, these are principles that are pretty universal across, whether it's your credit report or
Right.
mine.
It's very personal. It's realistic to you
Yeah.
as the individual.
But the impact that any one of these things have can vary greatly between yours, mine, or anyone else's,
Based off of your own personal scenario.
based on the scenario and the borrower's goals. So the approach that we take, again, I said one time, is that we mix personal finance principles with the credit report principles and how we coach and train. But the other thing there is we make it very personal to the credit report and specific to their goals and what they have within their credit report.
Okay.
Because again, these different factors may score differently for other people. And we want to make sure that as we provide information, we're doing it unique to their scenario, what their goals are, and how we can help them, get on that path to financial freedom.
So very appropriately called this resource that we provide within our e-banking platform. It's available both on the app on your phone as well as if you're at the desktop.
Yeah.
And we call it SavvyMoney.
Yeah.
What a very appropriate name of it being called SavvyMoney. There's
Savvy.
one line, right? Be savvy with your money. Be savvy with what that number is as it relates to your credit score based off of your credit report or history.
Yeah.
One of the items that I know that we wanted to touch on as we wrap up here is disputing incorrect information.
Yeah.
You open up that report, you see information. Yep, that's mine. That's mine. That's mine. Like, what the heck is this? What the heck is this?
Yeah.
What steps can members or consumers take when they see incorrect information?
So there's kind of generally two, is you can contact the bureaus yourself directly.
Okay.
And you go through all three of the individual bureaus if that trade information that's incorrect is in fact on all three different credit bureaus. With the SavvyMoney resource we provide is a partnership with TransUnion. So it is only showing you one credit bureau, and that's TransUnion. However, with this SavvyMoney tool, if you identify something that is wrong or incorrect or not accurate with your credit, and you dispute it through the SavvyMoney resource that we provide, and TransUnion says, yes, we agree with you, this is fraud or this is not accurate, whatever the case may be, on your behalf, they will contact the other two bureaus and make sure that that issue is corrected with them as well.
And so that dispute process is baked into SavvyMoney. If
It
you
is.
see something, you can go ahead and click on it and say dispute it.
Yeah, and you're doing it one time through this resource as opposed to trying to contact each individual bureau
Okay.
all three times and going through the same process three times.
A pretty powerful opportunity.
It is.
Great resource, SavvyMoney. Jeremy, thank you for joining us today on the CapEd podcast and being able to help our members pursue stronger financial well-being. Thank you.
For more information on our Get Give program and our commercial lending products and services, please check out our website at capedcu.com. Share accounts are insured by NCUA.